Hi everyone, welcome you once again to Micro Learning. This is Shailaja with Class 12 Economics. Lesson number 2, National Income 2.6. So previously we have seen about the basic concepts in national income, how to calculate national income. So today we are going to see what is the difference between factor cost and market cost. The word factor cost itself tells you the 4 factors that we use, that is land, labor, capital and organization. For these 4 factors, what is the cost that is incurring? So when you are producing a particular product, you have to spend a lot for it. When you spend a lot of it, cost incurs, especially for land, labor and capital. Whatever is left over is going to be the entrepreneur is going to receive. So when you produce a particular goods and service, we use these 4 factors of production to the ultimate level. And for that, we are going to get reward. For example, machines are there. You want to purchase a machine. You want to purchase a land. You have to give away wages or salaries. You have to give interest for the capital that you have borrowed. All this has to be taken into consideration as factor cost. So here you can see there are number of inputs that are included into the production process when producing goods and services. There is any number of inputs that we are putting into the production process. So naturally when we are putting an input, there should be an output. So what are the inputs that we use? The factors of production. What are the 4 factors of production? Land, labor, capital and organization. Now, producers, what do? They produce goods and services. And they incur cost for that. That is what we call it as factors of production. So what will happen ultimately when you're going to spend something, that we call it as cost. So in return, what do we expect? We expect price out of it. So, you have an example. So, we can give any example for it. You don't have a land. You're going to purchase a land. So, you're going to spend on that particular land. Now, we are going to hire laborers. You have to give them wages or salaries. You have to give them. We do not have money. So, we raise capital. So, for that, what you are supposed to pay? You are supposed to pay interest towards it. So, factor cost is nothing but the inputs of the commodity. The inputs of the commodity. Now, what is market price? We have put all the factor cost inside, and if we have produced goods and services, that product, or we call it as services, is brought into the market, and market has a value for the particular commodity. Once you manufacture the goods and services, the goods has to be brought into the market, and definitely it will have a price. Any commodity which is brought into the market has a price. That is finished products. They have a price for it. So, the market price is nothing but the price that the consumer he is paying for a particular commodity, and he purchases the commodity. So, we can see a formula that is given here. Market price is equal to factor cost plus indirect tax minus subsidies. Or you can put it in another note. Factor cost is equal to market price minus indirect tax plus subsidies. So, this is the basic difference between a factor cost and a market price. Factor cost is nothing but, very simple to understand, factor cost is nothing but the cost that is incurred for a production of a particular commodity. We use all the 4 factors of production. This is factor cost. What is market price? Any product that is being produced has a price tag. When it has value and when it is brought into the market, that we call it as market price. Hope it is clear to you. Next, we are going to see what are the importance of studying national income. What are we going to know? First thing we should know is it's given various sectors. You know what are the various sectors that we have? We have the agriculture sector, industrial sector, and the service sector. When you compute your national income, first we should know what is the contribution done by various sectors towards the national income. What is agriculture's contribution? What is industrial contribution? What is service sector's contribution? All these contributions has to be calculated when we are computing national income. Now we have calculated, we have known the sources of income. We have collected the data, we have collected the record of the contribution done by agriculture, industry and service sector. Now we have seen the money, what level of contribution these sectors have done. Next, what does the nation has to do? It has to make policies. Okay, what type of policies it should have? It should have monetary policy and it is fiscal policy. Two types of policies. Okay, there are other policies also, but mainly when we are dealing with money, we talk about monetary policy and fiscal policy. Now you should know what is monetary policy. What is monetary policy? The overall supply. Okay, the overall supply and activities of the government. The overall money supply and activities done by the government. Then what is fiscal policy? Fiscal policy is nothing but the change in the government spending. Okay, from where does the government spends? From the taxes that we are levying towards the government. Third one is formulate planning. Okay, so national income, we have collected the money. Now planning is done. Okay, how progressive that we can make our economy. Okay, how well we can grow our economy with the help of national income, because national income tells the status of a country, whether it is a developed or a developing or underdeveloped. Okay, and the fourth one says to know the country's per capita income. Naturally, when we compute the national income is divided by population and that gives you the per capita income. Building economic models, both in long run and short run. Okay, economic models are how it has, that is how the economy has to be distributed. Next one is to make international comparisons. When we collect the national income, okay, we can compare ourselves with other countries, and by comparing we'll know where do we stand in a position at when it is regarding national income. Okay, that is you can make a comparison with other countries and show ourselves that we are equally good to better than the other countries. Then to know the distribution of income for various factors of production. And here you can see to arrive macroeconomic variables. First, let us know what are the variables. Tax at GDP ratio, current account deficit, GDP ratio, fiscal deficit at GDP ratio, debt at GDP ratio. So, tax. What is the amount of money that we are getting from taxes? That contributes towards our national income. What is our current account deficit? What is deficit? Shortfall of money. Okay. Next one, fiscal deficit. Fiscal deficit is nothing but the difference between the total revenue and the total expenditure is called as fiscal deficit. Next is the debt. The amount of money that we have borrowed from other streams or other sources. So that we call it as debt ratio. You have a worksheet. What is factor cost? Give you examples for factor cost. What is market price? What is a formula for computing market price? Those who are watching this channel for the first time, please subscribe, click on to the bell button for further notifications. Thank you.